So let's assume that I have 10,000 rupees in my trading account, right? I can actually take a leverage from the broker, right? Maybe 5 times leverage or 6 times leverage, or maybe 3 times lower also, right? That means I can execute trades worth 30,000, 40,000, 50,000 while having only 10,000 with me. Hey guys, what's up? Welcome to another episode with me, Shashank Udupa. And in today's episode, I'm actually going to talk about some myths that people talk about in day trading. I'm also going to talk about a few terms that are very important for anyone who's even thinking of doing day trading. Now, a lot of people have been asking me this question in the chat. A lot of people have been telling me to actually make a video on day trading and start a series for day trading. But look at this. I'm also learning day trading, right? So when I'm learning, I'm trying to teach you guys as well after I do the learning part. But I think before we get into the advanced topics, let's quickly brush up our old topics, right? So today what I'm going to do is very quickly I'm going to talk about a few things that people assume that is happening in day trading, or the myths that are there in day trading. So we're going to clear all of those myths out. Now, number one is investors need a huge capital to make money from the stock market when you talk about day trading. Now, there's this common assumption that if I have to do intraday trading or day trading, and if I want to make money off it, I have to spend a lot of money on it, right? Now, there are two types of intraday trading that happens. One is buying and one is shorting, right? Or selling, it's called. So option buying and option selling is the two things. And I'll go into detail much later on this, but these are the only two formats. Now, option buying does not require a lot of capital. You can actually start option buying with 2,500 to 3,000 rupees to even 5,000 rupees. Option selling is where you would need at least a lakh or minimum of a lakh to start off with, right? So it does not require insane amount of capital to actually come and start investing. That is number one. So this myth is very bad that is there in everyone's head. Now the second part is that people assume that intraday trading is a loss making machine. You will lose all your money and you will become barbad. Now let me tell you one thing, right? That will happen even if you invest in the stock market without doing your own research. If you have no knowledge in what you're doing, you will lose money in the intraday trading as well. If you think that you are too good to be true and you will not use any risk management techniques and you will just sit with naked options, or you'll just buy something and just sit down without hedging yourself, that is very risky because the market moves up and down very fast. So you need to also focus on having proper management techniques in place, proper risk management techniques, and proper strategies in place so that you don't go into a maximum loss output. See, at the end of the day, there's only three things in the intraday. Okay, you're only predicting three things. One, if you're an option buyer, you're actually predicting two things. What is it? Either you're saying that the market is going to go up or the market is going to go down, right? If it's going to go up, you buy a call option. If it's going to go down, you buy a put option. That's all you can do. You're just predicting 1:1, it's 50% odds. The option sellers have three options, right? One is again going up, one is going down, and one is that it's just going to be in a particular range. It is not moving at all, so I make money off that range, right? So these are the three options. Now, you don't need a lot of capital to do this, but if you are also greedy in the stock market and if you're not happy or satisfied with the results, you will end up losing a lot of money. The third thing is people assume that the stock market intraday trading is only for experts. Now, it is not only for experts. Obviously, anyone can become a day trader, but you need to start learning about it, like how I'm learning, right? Sometimes it fits, sometimes it doesn't fit, right? For me now, I'm trying to understand and learn, but I don't know whether I'll actually do it later on. If I think I like it, I might do it later on. I don't know, right? So it is very interesting or very important to first understand whether you like it or not, and you start reading about it and you do paper trades on it. Paper trade is virtual trading. There are a lot of softwares online where you can do virtual trades to see ki boss ye mera palle pad raha hai ki nahi, or is this too complicated for me? Is this something that I'm not good at or I'm not understanding? And be honest with yourself, right? Because it's your own money. But this is only for people who want to explore day trading as an option. Again, you don't know if you're good, but try it out once. The final thing is people assume that in day trading, high risk equal to high returns, right? Now, high risk definitely equals to high returns everywhere. But when you talk about controlled risk, so risk management techniques come into play. When you talk about controlled risk management, you get controlled returns. So I'll tell you what, most of the times in day trading, people lose money for 2-3 factors, right? They'll have all the knowledge in the world. I know everything, right? मेरे को सब कुछ आता है. I know exactly when it's going to go up, when it's going to go down. But most of the time, you need to understand more about yourself, right? Because you will start getting greedy. You will be like, no, थोड़ा और मैं रुकता हूँ ताकि ये stock और ऊपर जाएगा and I get more returns or more money. So you should come with predetermined notions, right? कि what is enough for me? 10% अच्छा है, ठीक है. As soon as it hits 10%, I'm out. I will not be greedy. Let me take another position and enter. Second thing is patience, right? Because you keep looking at it going up and down, up and down. You think this is the right time, but it's not the right time. So you need to wait. In the entire day, even if you get 1 or 2 good trades, you're enough. That's done for the day. You don't need to do 50 to 100 trades in a day. So these are all the four myths that I would like to demystify before we even think about learning about this entire day trading, right? Now, Coming to some tools that you can use with day trading, let me show you some of the tools. Right now, one of the tool is leverage. I don't know how many of you have heard this leverage, but leverage is, if I have say 1,000 rupees, I can actually take trades up to a certain amount or a certain multiplier. So let's assume that I have 10,000 rupees in my trading account, right? I can actually take a leverage from the broker, right? Maybe 5 times leverage or 6 times leverage, or maybe 3 times lower also, right? That means I can execute trades worth 30,000, 40,000, 50,000 while having only 10,000 with me. So that is what I'm doing. I'm taking extra and over leverage to increase my profits. But at the same point, if you do a bad thing and you're over leveraging yourself, you can also reduce the profit as well. In fact, you will lose the capital also, right? So basically you're trying to do leveraging. That is number one. Number two is called pledging. Now this is something a lot of day traders do, which is basically mortgaging or pledging. Now there's a very smart way to do this and there's a very stupid way to do this as well. Now the smart way to do this, okay, what is pledging? First of all, pledging is nothing but girvi rakhna. Right? Pledging simply means taking loans against the shares that you have. Now assume I've bought shares of a particular company. Let's say assume I bought, for example sake, say one particular company I've bought, right? If I keep that stock with the broker and say, soon this company is there, I have 10,000 rupees worth of this stock, I'm giving it to you, you keep this as security, you keep it as a mortgage and give me some amount of money to play with it. So the underlying security is still there. Okay, that might be growing as well, right? But I will take a loan from that and I eventually have to clear the loan. I will take that money and play. But here what happens, I don't get 100% of the loan. There's a small haircut that also comes in, right? So they'll be like, no. Then I will not give you full 100%, maybe I'll give you 70%, 80%, 90%. So a lot of people, what they do, smart. So this is the smart way and the dumb way to do this. The weird way, the bad way to do this is that you take your entire stock portfolio and risky stock portfolio and keep it for pledging and then you play in the intraday market, which is bad. Okay, you might lose because two things are happening here. Your stocks are also volatile and you are also playing a volatile game. So both are big no-no. Now the smart thing to do, what a lot of people do, is they take fixed income bonds or fixed income debt. So more importantly, like your fixed deposits or like your government securities or those type of bonds or Bharat bond. They take these type of bonds and then keep it as a collateral. So when you take these type of bonds and then keep it as a collateral, that is confirm making some amount of interest over a long period of time. So the volatility is not there. You're only playing volatility on this side and you're not playing volatility on that side. So these are the two different angles that you can also play with. So this is pledging. Now the third one is a new mechanism. Actually, let me show you how to do this, right? Now, before that, pledging, basically there are two main reasons to do pledging. One is to obtain a bank loan and the second one is to fund their trading activities. So these are the two things that people usually take a pledge for. Okay, so there's a smart way to do this and there is a bad way to do this as well. So you need to figure out what is a good way to do. Now third is called margin trading. Now let me just show you how this looks like. Cool. So let me just show you what margin trade financing is. Let me explain more in detail. Currently I'm on Bajaj Financial Securities website, which is a 100% subsidiary of Bajaj Financial. So let's understand what margin trade facility is, right? Now, margin trade facility financing or facility is basically a facility offered to investors or traders to increase their buying power of shares or securities by paying a small token amount. So basically, it's a leveraged position. I can pay a small amount upfront and get a massive position on top of this, right? To explain in simple terms, whatever this extra position I'm getting is called margin. So either I can give cash or I can give my current stocks as collateral and then get a higher amount to trade with that perspective as well. Now, basically, you can avail up to 3.5 times the position of contribution. So whatever you give, you get 3.5 times of it. But there is also a small rate of interest, a low rate of interest, approximately 9.25% is the rate of interest that is there on this. And because of that, it makes it easier for you to take some kind of leverage and obviously make money from the market, right? Now, obviously, it depends on you how you can do all of that. But this is how it is. Now, just to give you a slight example of how this would work. Now, for example, if you are availing a 1 lakh margin trade facility, let's assume you're taking a 1 lakh kind of a MTF. On that 1 lakh, the interest you would pay is only approximately 9.25%, right? Earlier it was lower, but now because of new repo rates that got changed, you have to pay a slightly higher amount. But basically, you get the option to 3.5x your leverage for delivery trading, and that will obviously give you more leverage to start trading. So this is basically like a BNPL for stocks, like buy now, pay later for stocks, and obviously clear the whatever the thing that you have margin later on and clear the collateral as well, right? So this is what is happening, and obviously this feature over here is only available if you're a part of the Bajaj Privilege Club, which is the BPC club, and I think that costs around 9999, right? So this is basically me trying to explain how you can understand and leverage different type of tools and different type of positions that are there in the market and different type of examples that you can use to actually start taking a higher position into the market as well. Now guys, also please understand that investments in security market are subject to market risk and you need to read all the related scheme documents carefully before investing. Now there's another thing that I'm going to talk about. The fourth thing is called trade and carry. Now this is another very interesting facility that is there for day traders. Now trade and carry basically helps enhance the investment potential for traders. Now what does it do with this facility? Investors can buy stocks under the delivery trade by paying a partial margin upfront, and the remaining amount of money can be paid within 7 days. Means I'm taking a position on Monday, okay, and I'm paying a small amount right now, but the remaining amount I will pay after 7 days or maybe after 5 days. So 2 plus 5 days. Now what happens? I have a lot of amount of money corpus still in my hand, which I can again deploy and get some kind of interest or some kind of return on it. See, the way stock market works is there are so many different avenues, there are so many different ways where you should use money, leverage money, play with interest rates, because as I said, interest is everything, right? If you know how to play interest rates smartly, then you will make a lot of money out of it. So you're borrowing money and you're deploying that capital and making more money off it, then you're a very smart, considered as a smart investor. Okay, now this was a very simple, small, quick video about the myths that I'm demystifying and 4 different features about day trading, right? Now next I'm going to talk about psychology of day trading in another episode. Okay, so if you like this episode, please click on that like button and subscribe, and I will see you guys soon in the second episode, which is going to be about psychology of day trading. If you like this video, please click on the like button and also comment if there's anything else you want to learn, that you want to understand or you want to demystify. I'll learn about it, I'll come and teach you about it. I've also got some requests on please show us all the different type of chart patterns that are there and try to explain it to us. I will do that as well in one episode. Okay, see you, take care guys, bye.